Are you in the process of consolidating your debt, refinance, or getting a new loan? Have you ever wondered why the lenders ask you for certain personal information and how the lenders assess you as a borrower? Join me and Vorleak today to learn more about your characters.
Welcome to the Money DNA channel. Money DNA is a financial fitness community where we bring everything about money and beyond money concepts in life to help you create healthy money habits and to be financially fit for good. It is important to understand that the advice is general in nature and does not take into account your personal objectives, financial needs, and overall well-being situation, and it may not be appropriate for you.
Hi everyone, it's Winnie here. Thank you for tuning in into Money DNA. We'll be looking at your characters, how will the lender views and assesses you as a borrower. Join me today is Vorleak Srey Veer Finance Advisory Services. Vorleak has been in finance and banking industry for 16 years, and in 2021, Vorleak brought her rich experience and knowledge and started her own business, Veer Finance Advisory Services, which provides various of financial solutions and small business planning and advisory services to her customers. Vorleak is also a big advocate for financial literacy and currently is a guest speaker for Financial Toolbox, a non-profit organization to empower women through financial education. Vorleak, welcome to Money DNA.
Thanks, Winnie. Good to see you again.
Good to see you again. So V, last time we talked about a very important concept, which most people don't even aware of when they are going through the process of getting their loans, which is having a right mindset. So let's continue unlocking the means of getting your home ready. But before we get into that, do you want to recap what we said last time?
Yeah. So last time we did touch on mindset and being specifically ready to take the next step. So for me, I think that's essentially knowing your why and your strategy.
Yep.
A lot of people get into debt to buy their first home or an investment property because, it's the great Australian dream, or it's just something that you're supposed to do. And a lot of people sort of go in and ask the question, what do you think about this property? Or this house looks good, but there's no actual rationale behind it. So I guess before you get into something like that, stop and ask yourself, why is it that you're doing this? What is your strategy and what is it in life that you want to achieve? Find that end goal and then work backwards to get there. Is it that you want to retire at the age of 40? And if so, how do you create that financial plan? Is it because you want to have an asset for your children later on when they grow up, so you've got that financial sense of security? Is it to build a property portfolio that allows for capital growth and equity, so then when you do sell, you are debt-free? You get the gist. It's determining the end goal, thinking about your why, and having a strategy towards that.
Yeah, and I think that particular with the current situation right now, we also know that we are recording this video at November 2021. One of the studies shows, and also conducted by CoreLogic, saying that the last 12 months, Australian property market actually increased the price up to 21 or 22%, while we have our wage only increased slightly 1%. Which is so uneven and also imbalanced. So I think that a lot of people are actually starting to act as a fear of missing out and didn't really know that what they are actually doing, because most people are doing that. And I think that you and I have so countless experience while we're working in the bank that people usually will come to us and say that we would like to borrow money because we wanted to get into investment property. But when we ask them why, they probably don't even know the reason behind it.
And sometimes the property market is driven by, I suppose, all the noise that's circulated within the market itself. And obviously with higher demand, higher prices, right? Going back to what you're saying is the FOMO effect, the bar effect, where one person's doing it, you want to jump on the train and get on the same ride without any really understanding. It's just, I've got to do it because everyone else is doing it.
Yeah, exactly. And also when we're looking at this, every industry have their own supply chain. So if we are looking at the finance side of things, of course, we're the ones to provide the money and also the funding to people to really achieve their certain goals. But at the same time, if we are looking at this finance industry conjunction with, let's say, manufacturing, let's say the property building side of things, I think that the last 12 months, what we experience is a lot of the probably the property builders or establisher, they probably didn't really see this going to be such a big jump. So instead of having such a big supplies or such a big, I guess, the resources in their warehouse, they are just trying to be very conservative. And all of a sudden, because the demand increased, they realize that they don't really have enough supplies in place. So what they are going to do is they order more. And all of a sudden, these supply chains become really high demand. And that's why there is a backlog. That's why you are paying extra money for what you are paying for the property right now.
Absolutely.
Yeah. So now all the questions that you mentioned, which is really, really important. I think that if we are going to sum up with that, that is basically to understand about the why. So if I am ready and I understand about my why, so I am mentally and physically prepared for myself for this journey, I guess what we need to know next is probably understand about the criteria we need to be, so that the lender will say that, yes, okay, I'm willing to lend that for you. Am I right about saying that?
Yeah, most definitely. And I think sometimes as well, aside from being ready, we jump in, we go and see a bank and we say we want to get a loan without any sort of preparation, right? So there's a number of different things that lenders will look at when they're assessing an individual's application in terms of merit. But I think let's start with the first and foremost, which is character.
Yep.
So
character.
Yeah,
that's a very interesting word. It's very much like we're looking at a person with a personality, or we're looking at like a certain houses, it has a certain character. So is that a certain words that the lenders or the bankers usually use?
It is actually. It is, I suppose, a banking lingo. So characters defined by, I suppose, you hear and people use the word character, but it's basically what lenders think of you and how they would view you as a borrower. And it's a really important thing that they look at and something that we tend to forget about.
Right.
So, yeah.
Now, because you mentioned about it's quite important. So I guess that before we jump into the pieces, I actually would like you to elaborate a little bit why it's so important for us to understand about this.
I mean, if you look at it this way, when we make new friends, we're naturally as humans going to ask around and say to people around us, hey, have you met this person before? What are they like? What do they do? Even when you meet somebody new, you're asking them what they like to do in their spare time, what their hobbies are, what they work. That's already you trying to gauge what their character is and who they are as a person.
True.
When we go and apply to rent out a house, the property manager is going to ask for a character reference or previous reference from your previous, I suppose, realtor, just to understand what you've been like as a tenant and who you are as a person. Same thing when you're going for a new job. If you're going to court for whatever reason, character references are always going to greatly help support you in that sense. So the same thing for a lender when they're looking at you is they're trying to understand who you are as a person and predict your willingness to repay the debt. So from a lender's perspective, I guess, your character defines you and what you're going to do when it comes for paying back that loan. So they're looking back at your previous history, your account conduct, that type of stuff. And I guess the definition of character as a whole in the English dictionary is the mental and moral qualities distinctive to an individual. So lenders will look at that. What are your qualities? How have you been in the past? And are you likely going to be the same person in the future when repaying debt?
And I think that you also touched on what's a very interesting word is a willingness. And I think that is quite interesting. when I was working in the bank, I actually always have the thought that once we are going to borrow something, that's our responsibility to pay it back. But then when I am dealing with some of the clients, I realize that no, it actually is not really a common norm. Some people actually was looking at borrowing as long as they can and paying minimum as much as they can so that they are not going to pay the whole lump sum, which is quite fascinating. So I guess that one of the things that you are talking about, character and also willingness, that's what you are referring to.
Yeah, well, there's a difference between willingness and ability, right? Like you might have the absolute ability to repay, but are you willing and want to repay? And that's where your character comes into play.
Okay, so if that is going to be that important, and at the same time, that's how the lender is going to view you as a good willingness and also a good borrower. So can you just break it down into the certain pieces that the lender usually will look at us as a good borrower?
Yeah. So like I said, there is a number of different things, but let's talk about the very main one that is quite prominent now in the finance industry since open banking came into play, probably about, a couple of years ago now. And that is your CCR, or otherwise known as a consumer credit rating. Yeah, so you probably hear this thrown around quite often where people say, what's your credit history? What's your credit rating look like? So every time you go and apply for credit or apply for a loan of such, even for a phone bill, so if you're getting, a plan through Optus or Telstra, they're going to do a credit check against your name to understand, what your credit scoring is. And your consumer credit rating is based on your existing loans or your account conduct on your existing loans, credit cards, interest-free cards, whatever it might be that you hold, and it scores you on that. Right. So a score of below, say, 500, for example, is considered less than average. 500 to about 600 is considered average. 800 plus is very, very good, meaning that your percentage of default or not repaying is probably below the 1% mark if your credit scoring is 800 plus. And that's determined on how long you've had the loan for, that you've been consistent on time with all the repayments. If you missed a repayments for any more than, say, 30 days, 60 or 90 days, there's marks that's placed against your credit scores between 1 to 5 and sometimes X's. X's on there are a big no. It's just no lender would touch you and look at you. And on your credit scoring as well, there's such things as defaults and judgments that's placed on there. So if you're not repaying your debt to the point where if you've been sent to a debt collector and you've defaulted, then that's going to stay on your credit history for about 5 to 7 years.
V, can I just ask a very dummy question here? So because you are talking about 5 and also different instruments, so what will be the range that we're looking at for the credit rating?
Yeah, so for any lender to really look at you at this point in time now in the world that we live in, where CCR reporting is so important in open banking, you'd want to have at least a minimum of about 500 minimum. Anything below that, it's going to be viewed not highly. 600 plus would be really good to a lender, and depending on, I suppose, the level of lending that you're going to get. So if your loan to value ratio is above 80%, then you'd want a high credit score of about 700 or so.
And also with the utilities and also all the daily expenses, would that be impact on my credit rating as well?
That's a really, really good question, Winnie. It's, we've come across in the past before where customers would come in and try and apply for a loan, and all of a sudden we do an assessment and a check, and it's determined that there's an outstanding Telstra bill for like $200 that they don't know about. And it's so common because people don't realize that utility bills, so like, phone bills, water bills and all that is now recorded on your credit history. And so a lot of people will have disputes between, most of the time it's Telstra, and they'll go, I'm not paying this because they're in the wrong, blah, blah. My advice would be, no matter what happens, pay it, dispute after, so it doesn't get onto your credit history. So yes, absolutely, it does impact your credit scoring if it's not paid.
Yeah, and I think that in the way it is actually demonstrating that having those utility being paid is a minimum requirement to be responsible.
Most definitely. And
Yeah.
responsibility comes in all forms where, yeah, so what if there is dispute between you and the provider?
Yeah.
What you're going to do in your character shows that you're going to pay it just to resolve it and then sort it out after. Either that, rather than just not doing anything about it and let it go to judgment or default, you can then take the next steps of actually calling the provider and saying, hey, I need you to defer this for me whilst we go through the resolution process. And so then it doesn't get recorded on your credit profile.
And I also think of one thing though. What about tax? Lots of people actually forget about paying their tax. Is it going to impact on their credit rating as well?
No. So the ATO and tax bills hasn't actually come into play yet with legislation. I know that quite recently, and we can touch on this at another time, that the ATO is looking, I'm not sure whether they have passed that bill yet, to now be able to report any tax debt of over $150,000 on your credit profile.
Right.
Which is quite a large sum. But at the moment, for anything under 150, it's not reported yet on your credit profiling. Lenders will ask, though, to make sure when you are doing your loans, and this is mainly for small businesses and companies, that your ATOs are up to date. And if it is not, then again, they won't touch you, because at the end of the day, the biggest power aside from banks is the ATO.
Yeah, that's right. So now we know that credit rating is really important. What if I mispaid a couple of my bills in the last maybe a period of time? How am I going to be able to improve my credit rating? That's probably one of the things that a lot of people want to know.
So have you missed your bill, as in like?
Yeah, or maybe I did my credit rating. I guess the very first question I probably need to ask is, where am I going to be able to see my credit rating?
Yeah, most definitely. So you can, anybody can actually get a hold of their credit profile free of charge once a year. You can
that's good to know.
Access it more than once a year with a fee. It's only a small fee. Just jump onto vita.com.au and follow the links down the bottom. It will say access my free credit scoring. It's sent to you within 24 hours. All you have to do is send in your driver's license details, your ID details for them to pull up your credit report, and they email it all through confidentially for you.
Awesome. So with the link Vorleak just mentioned, I will put it into the comment section so that people are going to be able to access to that. So let's say that, back to my second question with the credit rating. So let's say I would like to increase or improve my credit rating. What can I do?
To improve your credit rating is quite a, I suppose it's quite an in-depth question, because it depends on your particular situation. So if, say, for example, let's just use a very simple example of that particular client that you and I worked with. So they came and saw me for a refinance and debt consolidation of their home loans and their personal loan, because they were with a government backed provider that was on a much higher interest rate. When we looked at their credit profiling, it was determined that the husband had a Latitude credit card, which is like a travel card most people forget about, like 28 degrees, that he hadn't been repaying. So he'd missed about 6 months worth of repayments.
Oh, wow.
On that one. Yeah. And on their actual home loans and their personal loan, they were making the repayments, but it was getting missed and reversed back. So it was like going in, but because there wasn't enough money in the account, it was getting reversed back into the account again. And this happened over the space of 4 months. When lenders look at refinances, it is a 6-month period of clear history that they look at for that particular account. And in this scenario, it was for adverse history. So to do that, obviously they came and saw you and they worked through a budgeting plan and I think for these guys, if I just take a step back, sorry, Winnie, is that it was just purely a lack of account management and budgeting. It wasn't that they didn't have the willingness to repay. It wasn't that they didn't have the ability to repay.
Yep.
They just didn't have the right habits in place.
That's
and
right.
a budgeting in place and somebody to support them throughout that process. So, thank you for helping them out, because it took us 6 months, obviously, for you to come on board, put in a plan, determine what their cash flow was with their salary, their expenses, and all their commitments. We worked with them alongside each other for 6 months straight, where we were able to put in a budgeting plan and ensure that those repayments were going timely.
Yeah.
Once we were able to prove that there were consistent, timely repayments being paid to those loans, we were then able to take the application back to the bank and refinance it. So it was a 6-month process, but it was well worthy, because the client ended up saving $932 in repayments per month, which equates to over $11,000 a year, because the difference in interest rates and the debt consolidation was over 2.5% on a $450,000 loan.
That is such a big difference, and I'm so happy that at the end of the day, because of our collaboration, we actually is going to be able to help out other customers to really achieve their certain goals in a shortened and also efficient way. And I think that a lot of times when we're looking at things, everything also have to have those consequences. Everything is all linked together. When you're looking at your home loans, we're looking at your credit rate. Credit rate is going to look at your budget and also your behavior. And when we're looking at the budget, lots of times you and I know that budget management, just like you said, it's not because of they can't, it's just because of a willingness and also the behavior. So what I do is not really looking to, you really need to cut down on certain expenses. It's more about how do you usually view yourself? How do you view your overall lifestyle? How do you really view your money? And then really understand about your core, understand about how you manage your own money, how you're going to have a good relationship with your money. And then after that, we can try to put some action plan in place. And that's how all the budget management should have, rather than, we need to cut down certain things. No one likes to be told that, I need to cut down certain expenses, or I need to reduce my lifestyle. And then people are going to take that as a defendant mode. So it is I would say sometimes it's a very fine line art, but at the same time, once we are going to really understand about the things, and back to what we said, the why, then it's easier for us to really work around what is going to be a strategy or also all the actions in place. Yeah,
that's exactly right.
So now we touch on with the credit rate. What else are we looking at?
So credit rating is the main one they look at, but not only that. So when we submit an application for assessment by the lenders, you're going to get asked your full name, your date of birth, how long you've been in your job for, what you do, your previous employment, your address, how long you've lived there for, your previous address. And all those things come into play to form your character, even your marital status, you're de facto single or married. How it's important is the fact that, let's say, for example, you've declared that, you've been in your job for 3 months, and then your previous employment, you were in there for 6 months. Previously, you were in there for 12 months, and each industry was different. A lender's going to view that as no stability and a risk of you then moving jobs again. So that's going to form your character in terms of, well, this person keeps moving around all the time in their jobs. So how's that going to impact their ability to repay now, right? Yeah. Whereas if you've stayed in your job for the last 3 years, then it shows stability and good character.
Yep.
From a lender's perspective. Same thing as your residential, history. So if you've lived in your current address for 6 months, but previously it was 3 months and previously it was 12 months, again, it's showing that instability and the movement. But if you've lived in the same address for the last 10 years, it's showing that stability. Your savings history, so what you own in your assets as well, shows your character. So, if you've got $100,000 in savings ready to go for this deposit, and only one credit card that you're using and managing well, your character shows that you're financially sound, you've got a good savings account conduct, you're the type of person that's to save and manage your money really well. But let's say you've got $5,000 in savings, you've got a car loan for your car, you've got a credit card that's maxed out because you've used it on a holiday recently, that's going to be viewed by lenders as not great character, because you haven't been able to, I suppose, put a savings plan into place and manage your budget. And this is where, I guess, being home loan ready isn't just about mindset. It's about speaking to the right people and saying, well, if my goal is to purchase a property in the next 6 to 12 months, how do I get there? And what budgeting tools and plans of support do I need to put in place? And you've done great work with some of my clients to do that. And for me, it's not just about, if we can't get you to that goal now, then when and how can we get there? Working together as collaborative.
Yeah, so if you actually look at that, the lender is looking at the holistic way to see who you are. And when we're looking at different angles and also different aspects in life, they look at your residential history, employment history, income history, marital histories. And I think that all in a way, it's very much like looking for a lifetime partner. You really want to make sure that a person is going to be stable, rather than just being with you for a couple months and then all of a sudden they are going to take off for another country or another places.
Yeah, that's exactly right. Well, it's funny you say that. Yeah, because when I sign, I suppose, the mortgage documents with my customers, I'll actually say to them, well, here's your marriage certificate to the bank. I hope it's not for 30 years for your sake.
That is so true.
That's what it is.
Yeah, well, obviously, if you are looking for a fling, or if you are looking for just a short-term fun, then that's fine, because we are not here to judge or anything. But at the same time, if you're looking for a lifetime partner to really go through a whole journey, obviously you really want to have someone to be stable and be side by side with you. And that's why you need to do all those health check and also employment check and also residential income check. And I guess that's what the lender is trying to do as well.
Correct. They're finding the right partner.
Right match. Oh,
yeah, exactly. Like dating with lenders.
Yes, maybe we can also start in a business like that. Right. So I think that I love our conversation today. It's just so fruitful, and at the same time have so much content that if I'm going to summarize what we talked about today, is pretty much the second step of getting our home loan ready. First thing, of course, to identify our why, which is our mindset. But the second thing is actually making sure that we are going to be the right match for the lenders. So the right match is going to include your own credit rate and also your own histories, including your employment, your residential, your income, your marriage status. So what would be the key takeaway that you would like to share with our audience then?
Yeah, so stay reputable, ensure you're on top of all your repayments, that you've got a goal in place. If you can't make a repayment for whatever reason, whether it be with your utility bill or your council rates or a loan or a car loan, then make arrangements with that particular lender or that provider, and defer those repayments before a mark is placed against your name. Actually intervene early. Know what your credit score is, so always be on top of it. So like I said before, you can get into vita.com.au and get your free credit profiling within 24 hours, so you understand where you're sitting at. But at the same time, just plan and think, if you were to lend money to somebody, what would you want to see in them? You want to see good savings, good repayment, good account management. And if you feel like you need help in that area, then review it as an overall, and that's where we can come into play to help guide.
Exactly. I think that the earlier you are going to engage with the professionals, the earlier you are going to get yourself prepared. And that's why we're here for. So that is such an important thing that I think that you just elaborate things so well. And so now, next time, what we're going to talk about is your collateral, what you can offer in exchange, including what you got and also potentially your guarantors. I'm going to just wrap up our session today. But if you like what we just share and also think that someone may benefit from the content, please like, share, or subscribe our channel. And if you'd like to book a complimentary consultation about your money DNA, or you'd like to contact V to talk about your lending needs, the link and the contact detail will be captured down below. Also, if you'd like to leave your questions or comment below, we'll get back to you as soon as possible. Thank you for joining us for the conversation today. Keep financially fit and healthy, and I'll see you next time. Bye.
Thanks.